Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and/or financial topics. So let's dive in. Let's take a look, see what people are sharing. If you want to follow me at Finance. If you want to join our community, finding-value.com. I dive deeper into all these topics, subjects looking for potential investment opportunities, and I share those opportunities with everyone in the community. If that interests you, if you're hardcore watching YouTube videos on finance all day, this will benefit you and you can ask me questions about investing. And hopefully, you can learn a lot by attending the question and answer sessions. I was just like you guys, listening to YouTube clips nonstop back in the day, trying to figure out how to make money from the information. What I did is I learned a whole bunch on how to convert data and information into usable ideas to make money from. So we've got that coupon code special that's still active. Take advantage of it if you like to try it. Special is the coupon code, and you can get some savings if you want to try to sign up. So U.S. LNG gas demand, it's record high on last day of the year. So the last day of the year climbing to 15.2 billion cubic feet in a sign of a strong year ahead for the startup of two new gas processing plants. Preliminary data from financial firm LSEG showed. So we've got a lot of natural gas demand for LNG plants. It's forecasted to rise to 17.8 billion cubic feet per day next year. We got a lot of stuff coming up. If we were to come back down here, it says U.S. gas demand for LNG is expected to increase to 20.3 billion cubic feet per day in 2026 as the new plants ramp up output and climb to 24.2 billion cubic feet per day in 2028, according to US EIA data. So we're going from 17.8 projected in 2025 to 24.2 in 2028. Giovanni says U.S. petroleum inventories, crude SPR refined products, fell by 15.1 million barrels to 1,637 million barrels in October, the EIA. And what I see here, I see a potential trend line break where we've broken out of the upward trend in inventory. Now, will this continue lower? I don't know. That's something I'm very curious to watch. And I wonder what kind of impact that's going to have on pricing. Now, look back at previous bull markets. 1970, we went sideways in inventory, but we continued to climb and climb and climb. In the mid 2000s, we had the inventory drop a little bit, all the way to mid 2000s, and then we started working our way on up again. We've got this is a very big drawdown. The largest drawdown, definitely in terms of total barrels and maybe probably even in percent. I don't know how we're going to ramp this thing back up over the next 5-10 years. I think we're going to get tight. I think oil is going to get tight over the next 5 or 10 years. Very tight. Tighter than we've ever seen it, and I don't know how it's going to resolve itself. That is the big question. How is it going to resolve itself? And people will say, well, you're just going to kill demand. At what price? How high are we going to go? And what if we kill demand, but the next year we need to kill another million barrels of demand? We haven't seen an oil market, we haven't seen an economy go through that yet. I don't think we've ever seen that in the worldwide economy since we found oil in 1861. That will be something to watch. CRB index. Casper putting out the commodity index is showing a lot of strength here. And here we are breaking to the upside for the CRB index. Am I bullish? Yes, 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 yes. This is what we want to see. Wave three is starting. Wave three is starting. An Elliott wave, you got first wave, consolidation, then a potential second. Maybe it's two big waves. I don't know. We'll see. Now, Nat Gas, a pullback to 325 will validate a target at $6.50 on Natty Gas. So natural gas, at least from a point and figure chart, we've got a triple top breakout, and we could potentially see $6.50 as a price objective. HFI Research says, when does the investment community realize that U.S. oil production has all but peaked? Marginal growth ahead, plateau starts in 2027. What does this mean for worldwide oil production? I don't know. This scares me a little bit. It does, because we hit peak oil in the 1970s. You saw the inflation that ensued with monetary bank lending and the inability for oil to increase during that bank lending. It was highly inflationary. But that was constrained to America. So we could grow into the world's oil production, which we did. We grew into the conventional world oil production in the mid 2000s, is where that peaked. Conventional oil. And then you saw the inflation that ensued when that occurred. What's going to happen if we peak of world oil production in all, and we can't increase it any further than what we have? And with the debt situation around the world of all these different countries, they're going to have to continue to print for that system to survive. If oil cannot increase production alongside the increase of money creation or debt creation, you're going to get an imbalance, and that imbalance will be very inflationary. We will have to look at alternative sources of energy if they exist. Humans have never been able to create energy. We've only been able to gather it from our surroundings. Oil is gathered sunlight through carbon-based life. Same with uranium. Uranium is things that are gathered, it's deposits that are gathered by nature, along with natural gas. So natural gas, oil, uranium, and all these things are fuel sources gathered by the earth over time, which is more or less gathered sunlight. We can gather sunlight directly through solar, but it's much less efficient because your energy density isn't as high as those other, we'll call it batteries, stored energy forms. So humans have never been able to create energy. We've only been able to gather it through our surroundings, whether that be eating other animals, eating plants that basically have gathered sunlight energy, or burn it through fossil fuels. We haven't been able to create a sun, so to speak. Coming down to Ian Castle, says the main motivation for financial independence is to never have to work for or with people you dislike ever again. And that is 100% correct. My last few bosses, actually, I've had a bunch of bosses over my 20-year career being an engineer. I would say very few of them have been good. None of them have been great. I would say a great boss, if I were to sum it up, a great boss is someone who understands he or she understands what is difficult, what is easy, what brings value to the group and also to the company, and then has the ability to reason between value, skills, and we'll say positive additions to the culture, and then form all of those things together into a pay rate or a pay grade or whatever it is. What I've found is that a lot of the managers that I've been under, they're they're they don't understand what's important and what's not important. They also don't know how to delineate between what I just described there. You can be very skillful, but add zero value to the company. You can add tons of value and have very little skill. And then you have to look at, well, how much value did this person create? And it's all very hard to measure. So, yes, being financially independent and working on things where you put your efforts into it and you get a lot of money back from it, that's exactly where I like to be. I don't like putting a lot of effort into something if I see absolutely no financial rewards in return. I hate those types of jobs. But I like jobs where if I work hard, when I work even harder, I get paid what I think is a good rate for how hard I work. And it scales. Coming on to Josh, he said the U.S. oil demand hit a new record high. So demand weakness, question mark. U.S. oil demand rose by 380,000 barrels per day, or 1.8% year over year, 21 million barrels per day in October. A new record high for the month of October, and was the EIA's forecast of that, which is a little bit lower. And here's the red, and that's what we're beating. 2024 new all-time high for October. Coming down. Lynn Alden, none of the major nominal measures will get back to the pre-2020 trend. A permanent ratcheting up in money, debt, and prices can't stop, won't stop. It can't stop because it has to go higher by design. So it continues to ramp up in all of these metrics: federal debt, total public debt, up, 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 and up. Consumer price index for all urban consumers, all items in US city averages. Now, here's the problem with this: these are all going up exponentially. If you were to put a graph, like a linear curve, so if you were to do the rate of change here, it's flat to more increase, to a higher increase, to more increase, and now we're going vertical. The problem with going vertical with your debt and your money, which is a function of the design of the system, if your oil can't keep up, which is highly correlated with the gross domestic product, it means your income can't go up as fast as your debt. So your debt goes up vertically, your income can't, because we'll probably hit constraints in energy production. That is where your inflation comes in the system. And what we saw, a precursor to history, in the 1970s, what did we see outperform? Gold, silver, platinum, they all went vertical, along with oil. Oil did incredibly well during that time frame. Incredibly well. So where do you think I want to invest? Exactly. It's because of the design of the system potentially running into physical constraints of the system not being able to go vertical in its debt consumption versus its energy consumption. Says, in my humble opinion, there's too much optimism about tech and AI and too much pessimism about cyclicals. Let's see how this plays out in 2025. I totally agree with that. Patrick says, keep an eye on this chart. When silver breaks out versus the SPX, the gold and silver miners will be getting some impressive tailwinds. This breakout will most likely happen after the SPX starts to enter a bear market, which could be very soon. We've got these big periods in time, the 1970s breakouts, another big one in 2004, and we're right at the doorstep of another potential breakout. And again, this deals with silver outperforming the S&P 500. I think that silver is going to go vertical. Are we there yet? I don't know. I'm not going to worry about when. I'm looking at, Well, this is setting up for a potential big move. So I'm going to have some money allocated to that for that big move. Too many people get too focused on the win and they get not enough focused on if this outcome does occur, what will happen? How big will that return be? And what is the probability of that occurring? I think the probability is incredibly high that silver is going to outperform the SPX because of the setup that we went over with the debt up here, because of the interest rates, because of the inability for energy to scale maybe at the speed that we need it to. I think the probability is high. The question is when. Nobody knows that answer. Here's the most manipulated commodities. So when silver starts to rip and we've got the right market conditions, we've got the biggest squeeze in the world. Here's silver, and this is the concentration of traders that are short. So this is the largest traders short versus days of production. Silver and platinum, gold being third and palladium being fourth. Where do you think my money's at? Uh-huh. Where do you think the short squeeze is going to occur? Yep, over here. It's going to be the biggest. U.S. oil production shut in January will total at least 650 to 800,000 barrels a day. This, coupled with heating demand spike, will result in a deficit of 1.5 plus million barrels per day in January. Q1 global oil balances won't build. WTI will reach $75 soon, in HFI Research's opinion. I kind of agree. I think we're going to go higher in oil. So Grady, I got to talk with Grady here. I mean, this is silver, baby. This is silver. Last day of the year today. US and Can are open today, but it seems it was too much for silver to be able to break out on a yearly during 2024. Being rejected on the first real try is very normal, though. The chart is now set up for the huge breakout to happen in 2025. And again, this is the mother of all very probable cup and handles. The bigger the base, the higher in space, big cup and handle. And the fractal, smaller cup and handle, right there. We have a dream within a dream, and then we're going to break that dream, and we're going to go vertical goose soon, very soon. Now, everyone says, "Oh, it's not ripping." You guys need more patience. You need more patience. I've been in this trade since 2018 when I loaded up when it was down here in silver. I loaded to the gills, baby. I saw this big cup and handle. I can tell you the person I was watching when I decided to load up. It was Hubert Muhlman. Hubert Muhlman showed a chart in 2015, 16, 17, or 18, somewhere in that range. I saw that chart. It got burned into my head, that image, which is this cup and handle image. He said this could be a potential possibility. And I was like, oh, that definitely is. That's definitely a cup and handle chart that's going to break to the upside. And that's when I just changed my entire outlook, took a big picture view, and been buying certain things after that point. The Great Martini says Dow Jones update, 2 probable paths depicted below. The longer it remains under the undercarriage heightens the probability of a major sell-off. And he's talking about the trend line, quote, undercarriage, the breakout, and how we're underneath it, and a potential move lower. Very much the case. And if we move lower, that also means if silver moves higher, we get a big move up. Big move. And what they might try to do is they'll try to lower interest rates to save all this. Hey, Kim, another one, NVIDIA, looking like total garbage. This is the biggest bearish divergence I've seen this year. Look at the angle of that thing. Look at this thing go down. We could see a very big move lower in NVIDIA. Top calling is tough, but if I were to look at it, it potentially could be. We'll see. Investing does not equal, or investing versus gambling. What is the difference? So this is investing does not equal gambling. So the odds of losing money versus the odds of making money and the time horizon. So this is US stocks are represented by the S&P 500 and the IASBBI US Large Cap Index. Your odds of losing money in a month is 38% versus your odds of making money in a 1 month time horizon is 62%. Notice as the time horizon lengthens, your probability of losing money goes way down and your probability of making money goes way up. So at 15 years, you have a probability of almost 100% of making money and only a 0.2% of losing money. My time frame is in this range here, 5 to 15 years. Why do I take that time frame? The odds of making money. And it's not just making money, it's the odds of making ludicrous money. When you trade short time horizons, you don't make as much money. So if you lengthen your time horizon, you do two things. You make more money and you make a higher probability of success of making that money. So what do? I take longer time horizons and I make more money. The crypto sniper, the fifth technical framing pointing to a Bitcoin sell-off. Monthly shooting star. Eek. Wick at the top is not a good thing. They generally end lower. First wave. Third wave. Fourth is the pullback. Fifth wave. This is looking to go lower for Bitcoin. The S&P 500. Notice the rising wedge. Interesting how the RSI hasn't made a new high since 2018. MACD is overbought. The price range is becoming very narrow here. We could see a potential breakdown. Bitcoin update 92K on approach here for a potential move lower. We're still on support though, and it is holding at this time. Look at US power demand surging out in the future estimates. Way higher. Way higher. Charlie Munger says, I think an enormous false precision gets into things when you program computers to make forward projections for a long period of time. The harder you work, the more confidence you get, but you may be working on something that is false. Says Charlie Munger in some of these, they're trying to project future cash flows, and that's where the difference comes from your returns. It's the wrong outlook of future cash flows versus the reality of those cash flows. Peter says silver's industrial demand to hit record high in 2024, up 56% in the last 10 years for silver demand, and that's industrial demand. Expected to hit 710 million ounces in 2024 is what we've got there. Man, that's a big move. Gasoline, we could see a direction of the 2 month pattern this week, potentially breaking in gasoline, and gasoline's been incredibly cheap here. I've been waiting for a breakout, not because I buy gasoline, but just because it's been so cheap for so long. Nat Gas, hope you all are enjoying the festive break. Pop back to see how things are opened and see one is behaving nicely after popping that. So Nat Gas has been ripping. Talked about that a few times here. And that's all I've got for today, guys. So we're going to end it there. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. Special coupon code if you'd like to use that. We do have a midweek update being released. You can check that out on the website and get my opinions on what's going on there. I think it's a pretty good one. Got a lot of ratios in this one, and it's looking good. So, all right, guys, we'll catch you next time.